Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, December 2nd, 2020. And what I'm going to do in this video is review some potential trading opportunities in the home building sector. So what we're going to look at are a couple ETFs, including XHB, that's the Spiders S&P Homebuilders ETF. We'll look at ITB and maybe one other option for you guys that like the guys and gals that like the leverage ETFs. And but what I want to do is take a look at the charts of the components of XHB. Now, in 30 seconds, as a quick elevator pitch for this video, I'm going to cover trade setup in the sector. One thing I do on right side of the chart is I try to make an effort to balance long and short trade ideas, look at different sectors, different asset classes, stocks, bonds, commodities, Bitcoin, gold, wherever the opportunities are. And the other thing, if you're new to the site, I can tell you what I like to do quite often is identify and try to catch tops and bottoms. A lot of people think that can't be done. It's just something that I do with my charting style. For example, a few months back, I think it was late September, I started highlighting the coal stocks. This was a sector left for dead by most accounts, especially the U.S. coal stocks. And many of these, I'll just rifle through a few of them. Back in late August, they're up anywhere from 30 to 50% or more. Some of them might have even doubled by then, and they're still going. Like SXC highlighted, ARLP, big divergent low there, and you can see these things run. And again, these are bottoming plays. 82% rally, almost up to my final target right there, $5 so far. Arch Coal, NC, NACO Industries. A lot of them back then were also setups, like this one for with a breakout pending, or a buy signal pending a breakout of the rising wedge, and there's a almost 50% return. So you get the point. BTU, and then even more recently, a more mainstream sector. Coal's sort of a niche sector within the energy sector. Just before the elections, I mentioned the energy sector as being the most bullish of the 11 sectors of the S&P 500. Right after the elections, it's popped. Buys from the breakout there, XLE, the main energy sector ETF. That's your mainstream, big oil and gas companies, up about 35-36%. And again, just since the elections there in the breakout. And at the time, I also mentioned you could typically get more bang for your buck by going with these more niche subsectors, XOP, which includes the oil and gas exploration and production. And there's your beautiful wedge that I highlighted. There's the point where the wedge broke out right there, and you had about a 38% little bit of outperformance. And then the one that tends to outperform the most is XES. So again, since the election, a little breakout, hovered above the wedge, waiting for the XOP and XLE to break out, and you have about a 54% gain in just the past month or so since the elections there. So again, bottoming play. The sector was one left for dead. It was the worst performing sector in the S&P 500, and those are the kind of trades. Now we're going to do this in reverse. And, the last few months, the vast majority of the trade ideas have been long trades. And again, so I'm kind of just segueing into the fact that most people don't want to short right now. Everybody wants to be long. The market's been strong, especially lower quality, lower tier stocks, niche sectors like the the electric car makers, things I went over today. So again, we'll dive into the charts here, but to reiterate, this is a sector that I'm watching right now as a trade setup. There are a couple of these stocks that are broken down, and that's why I go through the individual charts. If you don't want to look at what we're about to do, is over 24 charts after this, individual stocks, then we can end it here, and I'll tell you that I don't have a hard a sell point or breakdown point for XHB. I do have some minor support here, about 54.74 give or take, and then I have a trend line just below there, but it's not a very well defined. I have the minimum of three distinct reactions, or maybe about three distinct reactions, and that to me is a minimum to make a valid trend line. The more reactions you have, the better, and that's why I referred to this as is not very strong support, mild support on both of those. However, I will go through this. If I don't make mention, a lot of these charts I've updated so you can see the levels. These are support levels if you see a marked level below, and they're all potential targets. And so if you want either maybe you're long in these stocks and you want to know when to exit. The home building sector has been very strong. These levels that I'm about to go over, especially when you see the top components of this sector breaking down, that's what I'm going to cover in the charts. That's when you'll have a sell signal. That's when you may want to stop out or take profits if you're long, or if you're comfortable shorting, then that's when you want to enter. Okay, so the broad market has been strong lately, at new highs or near new highs with broad-based participation. Most sectors have been rallying, so there's hardly any cracks in the market right now. And I went over that in a video today. We are seeing some of the big high flyers recently breaking down today. I went over that. But again, those are your second and third tier stocks. We're not seeing the market leaders breaking down. They're not at new highs other than Alphabet. But again, I just wanted to say that I need to be careful with this because short trades are counter trend trades. So let's dig into the charts, and then I will show you where I think when it'll be time to short this sector. And again, I do these videos in advance. If I do it after it breaks down, just like XLE, if I hadn't done that video in advance, by the time I would have picked up on it, we would have been halfway there and too late to enter a lot of those trades, things like that. So I do these videos in advance, laying out the levels. That way, if I'm not in front of my computer or busy at the time, something breaks out, you have the levels, you can set price alerts, and you can jump on those trades. Okie dokie, back to the charts. Again, here's a common theme. On XLB, I give you the levels, and here's some potential targets. And I have much better targets on the individual stocks. I always say this: if you have the time and inclination and capital to diversify, and as I go through this video and cover about over 24 stocks, maybe pick the top 6 or 10 or 12 in that sector, and that are the most bearish, go ahead and short those, and then avoid those that have the most constructive or bullish looking charts. You will almost certainly outperform the ETF. ETFs have convenience. They have safety, a little bit of safety and diversification. In other words, you're spread among, I'll tell you exactly how many right now. I just have to click on the watch list to the left of my screen here, and it tells me that 35. We're about to go over almost 36 stocks. And then ITB, before I move on to the individual stocks, ITB is a little bit more of a pure play on the home builders or home construction stocks. I'm going to explain that in a second when I get back to XHB. ITB, again, a lot of builders, and what stands out to me, number one, I do have a well-defined support level. It's right there at about 51.63. So this one, I can tell you, we had a breakout right there, just above there. We took out the previous all-time highs, back test, back test, back test, and what you can see on these little notes, LS, it means left shoulder, head, right shoulder. Let me turn off all the annotations, and that has the making of what appears to be potential head and shoulder stopping pattern. There's your left shoulder, there's your head, and there's your right shoulder 1, right shoulder 2, perfectly normal. Some head and shoulder patterns, in fact, this is what we might call a complex head and shoulders pattern with two shoulders on both sides. Left shoulder 1, left shoulder 2, head, right shoulder 1, right shoulder 2. And what you want to see going forward is a continued impulsive selling. When you want to see, and this is where I think a lot of traders fail to confirm volume patterns and price action on these patterns. You want to see an impulsive move down on increased volume like you had here, and you also want to see impulse move down on elevated volume. We're starting to get some. So if we can get some more downside pretty impulsively with increased volume, that will increase the odds that this is a head and shoulders pattern, or what we call a complex when you have the two shoulders on both sides. Perfectly normal. And there's your neckline. And so on that pattern, you take to get the measured move, you take the distance between, we'll do it here, I'll go to another board, we'll measure it out, and you take the distance from the top of the head down to the neckline, which would be right about there. Again, we have the neckline here, and then you take that and add it to where it breaks down. That gives your measured target on that pattern. And then I like to align that measured target with support or resistance, and I can see there's actually some good support right around there. So there's your target, and should that pattern play out, number one, it needs to trigger a sell signal, which would be a break of the neckline there. And that would be about a roughly 15-16% drop. So again, not to beat a dead horse, trade setup, not actionable trade. The difference being a setup is a potential trade pending an objective long entry or an objective short entry. In this case, we'd be looking for the objective short entry if and we would get that breakdown. So there's ITB, a little more clear as far as the levels go. And for those of you that like the juice, there's a nail. They used to have nail is the 3-time leverage bullish home builders ETF, and they used to have one called claw, which is, if you're not familiar, a claw is the back of a hammer where you pull a nail out. So a nail, you drive a nail into a piece of wood. A claw, you turn the hammer around, pull it out. But they eliminated claw. A lot of these ETF companies have retired some of their ETFs, especially the short inverse ETFs. Now, what you can do here, and the reason I'm going over this, you can short this, and then you put that, what I explain in the frequently asked questions page on the site, which is under resources. I explain how that decay works. What is decay? Well, for example, here's nail, and you can see it's well off its all-time highs. It's 300% leverage. All-time high was right there. Put in another high, a little bit lower high before the COVID drop. That was about a 95% drop. And because of that leverage, you would have gotten much better than 3 times what you would have got shorting XHB or ITB. And likewise, when it goes up, you will get more. Especially what you want to do is you want to be long or short these things. Well, if you're shorting the long time, the three-time bullish one during a downtrend, that decay works in your advantage no matter what. If you chop around sideways, that's when the decay is worse. That decay is working for you, not against you. So it's really not a bad idea if you can get shares from your broker to short these. And there's your neckline right there on the head and shoulders pattern. Left shoulder, head, two right shoulders there, 2 left shoulders, boom. And there's your potential targets for that one, again, if you want to short that. And you can see simple stuff. Divergent high, that was a big COVID drop, about 94-95% drop in nail. Divergent high right there, rising wedge breakdown. There was a bullish falling wedge, and I wanted to highlight this. This is why I always say divergences aren't a buy signal. That was a beautiful setup, but guess what? Never triggered. So had I highlighted this bullish falling wedge back then, you would have had to wait for a breakout, and you never got the buy signal. Instead, it went the other way. It broke down to the bottom of the wedge, and then finally you put in a divergent low right there, and that led to the rally. So there's a great example of why I say over and over that I'll point out the bearish and bullish potential patterns, divergences, things like that, but those aren't buy signals. Buy and sell signals come on breakouts of trend lines or bearish or bullish chart patterns, such as a rising wedge or a head and shoulders or something like that. So there you go. Those are the 3 ETFs. Simple stuff if you don't want to mess with the individual stocks, but now we're going to go through those. And a minute ago I said something about how these are, it's called the Homebuilders ETF, but guess what? They're not all home builders. In fact, the largest components, I'm going to go through these now in order of market cap. So these are all, every stock I'm going to cover now, 35 of them, and I'll go through relatively quick, because there's pretty much a common theme with most of these. But they are components of XHB and many in ITB as well. But you have companies like Home Depot. Okay, so Home Depot is not in the business of building homes, but however, they are in the business of supplying contractors, even homeowners with both building materials, plywood, lumber, nails, all that stuff. And it's also a play on the housing market. Obviously, if the home builders are booming, it's because a lot of people are buying houses. Rates are low, as they have been recently, right? And so then homeowners are more apt to spend money remodeling their home, putting money into their house. They feel good when their house price is rising. You get in a falling real estate market, all of a sudden Home Depot's not as busy anymore. So and I have to spend time talking about it because, again, it is a mega stock within there. It's a $300 billion company, by far the largest. The second largest company in this ETF is Lowe's, at 117 billion. Then the third largest, you get down to TT. That company is 34 billion, and they go down from there to the final company. The last one I'm going to cover is only a 1.3 billion. So that's going to have a big impact here. So that's why I want to cover these stocks. So what do I see with Home Depot? And what's the common theme with almost every stock I'm going to cover? Right here, this line, we made a slightly higher or equal high right there. And from this point right here, we've been diverging. So here's my common theme. We have negative divergence, big divergences, the kind of divergences that tell me we're looking at a major trend change, most likely if they play out. You go back in time, you can see my charts. I don't have DH, which means divergent high on every divergent high, but all the divergent highs are shown. There was a divergent high within a bull trend, but there was a correction. How much was it? It was about 18%. There was a divergent high. There was a correction Home Depot of about 27%. We pushed up. We had a little divergent high there, extended it right here. Let me add that on. This is the COVID drop right here. And just about every stock in here in this sector had a divergent high. You had one there and you had a correction. So it's not as if this divergent high didn't play out. It certainly did for a double-digit correction, better than 11%. And then there's the final divergent high or extension of that previous divergent high. If I can stop moving that trend line because I had that as a potential target. And from there into the COVID lows, I call it the March bottom, Home Depot fell about 42%. Okay, so what's the point here? Respect these divergent highs. They don't guarantee a trend change, but I like to say I would put about 90% chance when you have solid divergences, especially when you have a well-defined support level in which to trigger a sell signal, they are going to play out for what I call a tradable correction or a tradable trend change. What does that mean? 10% or more. Let's just keep it simple. So on this one, there's your recent trading range. The stock has stalled out, and you know, like a lot of things, like the stock market itself, you know, I think if the S&P 500 can power on through and go up another 10, 20, 30%, we'll probably not see this play out or break down anytime soon. It is possible. Sometimes I do see a sector like this, what I call a subsector. It's not one of the 11, you know, main sectors in the S&P 500, but it is a, you know, subsector within there. And sometimes you can see it go the other way. So we'll continue to watch it. There's your sell signal. Let me give you the level right here. Break of about 263 or so should do the trick. That'd be your first target. And again, I'm covering this one, not one of my favorites to short. Certainly I think would go down. It would almost have to go down because of the weighting in these ETFs, but there's some potential targets. And again, to me, a bearish chart because we have for the first time since the March highs right here, just before the bottom fell out, we have clear negative divergences that have been building now, and they're pretty large, indicating a relatively large trend change when we finally get those sell signals. Lows, LOW is the ticker. You know, same thing. I'm not going to go through each and every one. You can glance my charts. You'll see divergent highs. You'll see divergent lows as well, which are time to buy on a lot of these stocks. And there's your corrections. And here we are. We've been diverging now for a while. There's your RSI divergence started at this point. And this one already started to correct. Recent trading range, it was kind of, the top of it wasn't well defined, but the bottom has been. It's a support zone that runs from about 157 down to about 163-ish, 153-ish, I'm sorry. When you look at this, it broke down recently. It had a sell signal. Why didn't it really go anywhere? Well, because nothing else broke, not nothing else, but the majority of these stocks within the sector and the ETFs, the sector itself didn't break down. So that's one reason I cover all these stocks. When you start to see, especially the leaders, more and more of those break down, it is increasing the odds that that breakdown in the sector or those stocks will stick. But if 90% of the stocks in this sector are at or above support and one breaks down, that one, such as Lowe's, that breakdown is not likely to go anywhere, at least right away. Now what this did do, it broke down, nice red candle, kicked back to the top of the resistance zone, and it's right about there now. Now if it continues lower and takes out that recent low, that will increase the odds it's going to go down here and hit that 117 target. I could probably add other targets. These are not all hard targets. I kind of went over, there were a lot of charts for me to go over, so I marked up some levels. I can even tell you there'll be a few stops along the way. So this is what I would see if and when we get this sector rolling over, especially if we get the broad market rolling over as well, something along these lines. That's why I give multiple targets, and that would be at this point in time, maybe this 127.40. We'll just call that. I think that's a big, nice level to target, nice swing target on lows. Okay, moving on. I'm going to go through a little bit faster. I might not point out on each and every one, but you'll want to look and see if you have these divergences. Again, that is a common theme. Overbought. And also a lot of these stocks at all-time highs. I mean, here's Lowe's way above its previous all-time high back before the COVID lows. Yeah, the housing market's been strong, but keep in mind we're also just coming out of the one of the strongest recessions in history. Was a the indicators are all skewed. I'm not going to get into that now. We had 2 contracting quarters of GDP. That is technically a recession. Then we had this, the biggest drop ever in GDP. Then we had the biggest increase, which was restocking. But GDP is still below where it was before the market topped. 99% of this is Fed juice that has kicked this market up, and that's brought these stocks to valuation levels that I believe, and a lot of others do, are excessive and unsustainable, even if all these vaccines work. So this is a combination of an overvalued play plus, more importantly, technicals. I put, I factor in fundamentals, but I think technicals, I can tell you technicals are the driving force for the reason behind a trade. All right, so we're going to go through a little faster. TT, Train Technologies, those are AC units, things like that. Divergent high, 140, 158, it needs to break for the first sell signal, but then you have a trend line below. To be safe, you want to see that trend line get taken out as well. JCI, Johnson Controls, engineering and construction. As I go through the video, you can see the subsector down here. You can see if it's a home builder, home construction, home improvement, whatever they are, and this one's engineering and construction. And again, here's your divergent lows. You go long on these divergent lows, and then you look for these divergent highs, and you go short. Again, do you just short a random divergent high? No. In this case, you had a breakdown. There's your sell signal, and you could have shorted there, and then again on the back test, perfect back test. And if you shorted that back test and rode that short down, you made about 50% on your money. And this is a nice clean uptrend line, big bearish rising wedge. I gave you the how to get the measured target on a head and shoulders pattern. To get the measured target on a bearish rising wedge pattern, you take the widest part of the wedge, which I've just done here, and you add that to where the stock breaks down. And look where that brings us, right about to, let me turn on the levels here, make it a little brighter, give you the value, right about to that 40.64 support. I'm going to move it down here. That's where that line should be, at the bottom of these reactions, and that's almost a perfect measured target. And I'll tell you, you might be surprised, I've done this long enough, how often I take a measured target of a chart pattern like I just did here, or a head and shoulder, or any other pattern, and it plays out and it aligns really well with a very well-defined price support level. And it's not just these recent reactions here. You had reactions along here. You had reactions from below there. You had a major reaction high there. This was support right here. When it broke with a conviction. There was a big sell signal, came back, a little momentum overshoot to back test, but then failed, back tested again and failed. So that is a big level, and I would say this is what I call a high probability price target. If you are an options trader, I don't, that's not my thing, and I don't put those on here. I don't want to mess around with trying to, don't ask me what strikes to go with, what expiration, but I can tell you that's where I think the stock will go when we get these sell signals. On this one, you need to break a solid break below the wedge, and that will also be a failure. Right here, you had 2 previous all-time highs, and then a third right there. Finally, the stock, that's a breakout candle, breakout to new all-time highs, but a kind of a lackluster follow-through so far. So like the S&P 500 and the NASDAQ 100, breakout to new highs recently, but no oomph behind that breakout. There's not a lot of follow through. Now, and again, my point is if we break down here and you want to see a nice red candle, solid close down through there, then what this will be, this whole thing will be a bull trap, aka false breakout. And that's pretty bearish in itself. So that would give you on JCI, and I'm spending a little time with this one obviously because I like the chart better than some of the other ones. That's about a 10.5% drop. Nothing huge, and that's my first and minimum target. Should things roll over in the broad market, should I see things in the charts on these stocks, if we get these sell signals, that indicate we're going to go down further, then I'll add some additional targets there. Otherwise, we're looking for swing trades right now. CAR, Carrier Global, there's your trend line, just starting to crack, but not impulsive. Again, you could see some impulsive breakdowns in some of these, but this one's not impulsive at all, so you want to wait to see a little more downside and or more of these stocks break down. DHI, this is a big home builder, DR Horton. Same thing. I mean, you can see my boxed in range. This one's bouncing around, looking, head and shoulder-ish with the left shoulder there. Didn't do that right, but you can see where I'm going. Left shoulder, head right there, right shoulder, neckline. So, take that distance of the head to the neckline, add it to where it breaks down. That's probably going to bring you down here to my 52-ish target there. If we get it, divergent high as well, etc., etc., etc. LEN, another home builder. It's not mere coincidence. These look the same. Birds of a feather flock together. Head and shoulders, neckline, your trading range, and negative divergence. So, if these stocks were at all-time highs and we didn't have these divergences, I might not be zeroing in on this sector as a potential shorting op. And again, where most of these are still above support, and I've seen the most beautiful patterns, whether they're bullish or bearish, form and just never break out. So, if you want to jump the gun, if you're an aggressive trader, you could take a starter position now. Sometimes I'll do that if a sector looks so bullish or so bearish that I have a high degree of confidence it will break out, and then add to the positions once a breakout occurs, or you can wait. NVR, and residential construction, there's a trend line, needs to break to give a sell signal, divergent high, potential targets. MAS, divergent high, no hard support level, just it's already been moving lower. And again, see some of these up top. Now there is a sell signal right there. That is what we call a bearish engulfing candle, and that's a beauty. Bearish engulfing candle is when the body of a candle, big red candle, down day, engulfs the previous candle or more. And so what this one did, and that came right after that stock made an equal or all-time high right there. And so you want to see, number one, a bearish engulfing candle needs to come at the, towards the top after an extended uptrend. And what this sucker did is engulfed 1, 2, 3, 4, 5. The previous 5 candles were engulfed, and it also, in that single day, wiped out all these gains over the past, going back to July right here. And we're now moving lower. We're below that trading range. And so this one, to me, looks like it's already topped. Minimum target right there, 49.71. You could take quick profits. I put good odds at a bounce if and when it gets there, especially if a lot of the other stocks or the ETFs hit support at the time. If not, maybe it could go down through there. But if you're want to swing for the fences, instead of hitting a single, that would be a single. You want to hit a triple or a home run, just trail it down. If you get a good short entry, wait for an objective level. Right now, it's a little bit no man's land. What I mean by that, well, we're not far from my next target. There's only about another 4.25% downside. But again, so this one more of showing you that some of these stocks have already triggered some sell signals, others haven't. There was a beautiful uptrend line, great example of technical analysis, big trend line off the December lows right there from 2018, sell signal, and from there had shorted that sell signal, also took out the 50-day moving average. Stock fell 43% in a matter of about 1.3 months. And this, by the way, guys, is why I love shorting stocks. Stocks tend to fall much faster than they rise. In 1.3 months, this stock wiped out gains going back all the way for the past year and a half there. And that is typical. You see drops, stocks tend to fall faster than they rise. So that's why I'm doing the video. And I'm also doing the video again in advance in case we start to see more and more of these break down. Things can happen fast in the market. All right, there's one breaking down today, Whirlpool, WHR. Big red candle down 5.14%, negative divergence. First target, need to light that one up for you a little bit. There we go. About 164.81. All these are unofficial targets. The actual support level you'd want to cover, set your buy to cover limit on the short trade just above that level somewhat. First target, second target there. PMH, Pulte Homes, another builder, residential construction. negative divergence. See, I didn't mark all these charts up. The divergence is extended. Last time I had updated this chart, we had a divergent high there, and we did. We had a correction. Then we extended the same divergence, got even larger. That's divergence has started back here, continue to diverge, an even bigger correction. And like others, we have a gap support there, reaction highs back here. There's a magic number right there, about 40.69, give or take. Break of that level would be your next objective short entry. FBHS, Fortune Brands, Home and Security, divergent high right there, negative divergence, beautiful level right there, about 79.58 that level's at. And break of that takes you have a reaction high here. They may step in at about 73.48, but I'd be partial to hold this short down to at least that about $67 level right there would be my first target on that one. LII, Lennox International, I believe those are AC units too. Look at this. There's another bearish engulfing. So you can see we've had some sell signals in this sector. And next sell signal comes in a break of that minor uptrend line. And then after that, your next objective short entry is a break below 261.15. Or you could target a quick pullback trade. That's LII. That's a nice swing target down there at about 231. ALLE, Legion, it's a security and protection services, negative divergence and resistance. So that's one's at resistance. Here's one you could take a shot at an objective short entry here at resistance around 117.80 for a swing down there. The first target's about 108.14 and then 95.18. The bottom of this, what I see, here is just a multi-month trading range with roughly midpoint line right there that you could target. And again, last divergent high was right here, and the one before that was right there. MHK, Mohawk. This one, what I see happening, actually just broke out of a long-term downtrend line. It's been one of the underperforming stocks in the sector. I think they're flooring. I think Mohawk's a big flooring company. They may do other things there as well, but they broke out, and that was bullish in itself. However, it broke out, and it now has, like almost all the other stocks in the sector, negative divergence. So my guess on this one is pull back, and if the sector rolls over soon, come back and back test the trend line. We also have a potential uptrend line there. So target range would be somewhere in here, down around the 114 to 105 level. And who knows, maybe if we just get a correction in the sector and everything, including the stock market, goes to new highs after that, then this is where you want to cover and reverse to a long. AOS, which is A.O. Smith Corporation, they make electric motors, things like pool pumps, boat lifts, all kinds of stuff. You have nice, clean, negative divergence. So again, wash, rinse, repeat. This was probably a divergent high here. This definitely was. That definitely was. This definitely is. And that's what that one should do. Also resistance right there at 58.20. So again, if you're an aggressive trader and you're anticipating this sector breaking down, bounces up to 58.20, give or take, would provide an objective short entry with an additional entry or full position taken if and when that wedge breaks down. RH, Restoration Hardware, a big catalog company. You guys probably get those catalogs in your mail, furniture and stuff like that. Minor trend line break will trigger the first sell signal, and we're right on it now. Here, you can see it there. And first target be the trend line, and I really hadn't marked this chart up. Big old gap. Next target 31.80, and then or 341.80, excuse me, and then 255.90 or so. Trex, divergent high. Big level there, about 65.89. That's where you had a previous high there. We broke out. We've been back testing that level. So this is the big level right here. And move down. You could even short it down to that level. Maybe it holds, bounces again, maybe not, or add to a short position on a break of that, targeting what is that? 55.71. WSM, Williams Sonoma, another catalog company, furniture and that kind of stuff. Trend line target right there, divergent high. No hard sell signal level. There is a gap right there. You could put in a little support level right there. It might do the trick. FND, Floor and Decor Holdings. There you go, divergent high. Same story, trend line right there. Don't have all the levels marked up. If you're interested in any of these and you want me to sharpen my pencil and identify additional targets, let me know. OC, Owens Corning, fiberglass, stuff like that. Insulation, of course. There's your divergent high, already started to correct. We have a little minor trend line here, and this one also is sort of shaping up to maybe a potential head and shoulders pattern as well. So you want to look for the move down to the neckline, ideally impulsive, then a break of the neckline would take you down even further. Toll Brothers, another big home builder, and Toll Brothers, I haven't cleaned this chart up, forget about all these little micro lines here, but there was a big all-time high back there, came back up, a little bit lower, big reaction high, failed at that level again, also looking head and shoulder-ish with the left shoulder, head right there, right shoulder, neckline right there. So same story on that one. LEG, got a lot of lines, but you can just say divergent high there. Not one of my favorites, kind of a messy chart. BLD, Top Build Corp, Engineering and Construction, a negative divergence. Not a clear level to enter a short, but again, it's just showing you, that almost all these stocks have similar setups. Divergence, grinding around in a trading range. Quite a few have head and shoulder patterns. TPX, that's Temper Sealy International, beds, things like that. There's your uptrend line and divergent high. So, looks familiar. You had an uptrend line there. You had negative divergence. Boom. Uptrend line, negative divergence. Boom. HELE, Helen of Troy, negative divergence. Big level here, about 183.61 support level. If and when broken, opens the door to an even larger move. TMHC, we're almost done, about another 6 or 8 more stocks. I don't know why this one's not loading, so let's just go back to HELE. Okay, there we go. My chart froze up for a little bit, but there it is. Big divergent high, big level there, 183.61. Last drop, breakdown there, should take us lower. TMHC, wow, look at this one. Look at all that, all these reactions. This one's just hitting a brick wall right here at about 28.50. Boom, boom, boom. So, you can short it there, solid breakout. However, I wouldn't take a breakout of that level, as I often say, breakouts above resistance or breakouts to all-time highs that occur with negative divergence have a much higher rate of failing. So even if this one powers up, so trend line as well there that's holding on right now. In fact, I can move that trend line right there. I'll do this. It's actually starting to crack the trend line today. But again, if it were to move up, I would simply, these divergences would be extended right there. In other words, they won't be taken out anytime soon. They could eventually be taken out, but if any marginal new high in a reversal, keep those divergences intact. And again, that one's at major long-term resistance right there. MDC Holdings, symbol is MDC, divergent high, levels right there, target, next target 40.73. IBP, Installed Building Products, nice clean rising wedge. There was a sell signal, so here's another one that already broke down. Was good for about a 21% drop to that first target there, or support 86.16, and that we've already had a reaction. The reason I list multiple targets, I expect the odds are you get a reaction on the initial tag to each target. So had I seen this one back then and had I shorted right here, as an active trader, I probably would have reversed my short, meaning covered my short, gone long for a bounce there, especially if the chart's confirmed at the time, and then recycled back in on the bounce for the next leg down, expecting a break the next time we get there. We may get a little minor bounce, but I would expect a breakdown and continue on down to the next target there. LGIH, LGI Homes, big level right here. So there it is. Common theme. A lot of these stocks are either at or very near some pretty good support levels there. Kind of looking head and shoulder-ish, a lot of these as well. And you can see if this one breaks 104.20, should have a quick run down to about 95.63, give or take, right there being the first target. TPH, Tri-Point Home or Tri-Point Group. Again, another common theme here with a lot of these stocks bumping up against all-time highs, long-term resistance with negative divergence. That's why I expect a reversal versus a breakout. Sometimes I'm looking at stocks bumping up on long-term resistance, and I'm looking to position long for a breakout and a run to new highs and beyond. In this case, because of the divergences and these extreme overbought conditions, and just where we are in the economic cycle. We've had a heck of a run in the home builders, rightfully so. Fed took rates down to 0. free money. You can get less than 3% on a 30-year mortgage. So housing has been booming lately, but how much of that's priced into the charts? How much of this rally off the bottom, TPH has rallied 222%. How much more is it going to go? How much higher can house prices go from here? There is no limit. I'm not going to say there is. I'm not going to say the housing market can't boom into 2021 and beyond. I'm just saying it's been probably a little too much, a little too fast on many of these stocks. SKY, same thing. It's not a hard, well-defined support level, but pretty much bouncing around here. Long-term resistance, negative divergence. And now we have 3 more and we are done. Long video, guys. That's why I'm talking fast, but not one of my favorites, so I'll move on. CCS, Century Communities, divergent high. There's a trend line that breaks, triggers a sell signal on a break of this trend line, and 35.48 should be the first target, and probably more than that if and when that goes. MHO, MI Homes, 40.45 support. I haven't really sharpened my pencil on this one yet, but I'm going to give you a first target around 35.48 or 35.42 right there. And that's it. Back to the top of the watch list. All right, so we just covered all 35 components of XHB to kind of give you both an overview of the sector, what really needs to happen to get a nice correction going. And again, that would be a break of the majority of these stocks, particularly the big ones, the ones I started out in the beginning of the video, and of course the ETFs as well, ITB and XHB. All right, we'll wrap it up here. We'll keep an eye on this sector, and like anything else, if these sell signals don't materialize, it doesn't pan out, I'll revisit it 3, 6 months down the road, 9 months, whenever it takes. This has been Randy Finney with Right Side of the Chart. Have a great day.